It is Monday, June 29th, 2015, 4:15 p.m. Eastern, and you are looking at a chart of the S&P futures. As you can see, they got slammed today. However, it was interesting because they didn't get slammed compared to where they opened yesterday. You look at last night, which was Sunday night, they opened right around 2055, actually rallied up to 2085. We had a 30-point rally in the futures from last night's low, but then gave up that entire rally and closed on the lows right around 2050. However, it was only 5 points beneath yesterday's opening low. So while there was no doubt big move to the downside today, there wasn't a ton of downside continuation compared to where you were yesterday. There was a lot of continuation lower off the highs, no doubt about it, but you didn't go drastically beneath yesterday's low. You undercut it by 5 points. What does that mean? Well, to me it means we're maybe closer to setting up for a bounce as opposed to setting up for a lot more momentum lower. And what I would say supports that is if you look at the S&P chart on a year-to-date basis, what you'll see is these two trend lines here are plotted at the February high of 2120 and the 2014 close of 2058. And you can see how once we popped above 2058 in February, we've held that level multiple times over the last 4 or 5 months when we've tried to come down and approach it. This time, I mean, this is a nice powerful candle lower, so not going to discredit that. I mean, it's definitely a good job moving to the downside, but I would still say, watch 2058. You might be able to bounce around here and try and go back up towards 2080, 2070 to 2080, which if you look, you'll see that that was a support area starting in April on the S&P. And then I'd maybe look to put on a short trade there. Now, if you do just continue to flush, key support is the March lows at 2040 on the S&P. You get below 2040 on the S&P, you are making a key lower low, in my opinion, and that would set us up to test below 2000 into the year-to-date lows right around 1970. Yeah, 1972 is the exact low on the year. So just to recap, what I'm watching on the S&P is 2058. That is last year's close. Are you going red on the year? You closed in the red here by a tick. Or if you're defending 2058, looking for a bounce back towards 2070 to 2080. And then that's where I'd look to possibly get short. I do think that this market has put in its top for the year. The question is, does it have its low in for the year? I don't know. But I'll be very surprised if we go make new highs. And if we did make new highs, I would be a seller of those new highs kind of versus 2150. But that's getting ahead of ourselves in the event of a market bounce. So 2058 right here, 2070 to 2080 resistance, 2040 key support, below 2040, 2038, 2037, the high 2030s, and I think 2000 acts as a magnet, but 2000 key psychological level, another area where I'd look for a potential bounce. But again, kind of getting ahead of ourselves, so we'll see how this all shapes up moving forward. Keep an eye on futures here this evening. See if they hold this loss. They did get a little bounce at the close. After the close, the last 15 minutes, they've bounced just a little bit. All right, so now I'm going to dive into some individual stocks. Oh, but first, sorry, quickly, the NASDAQ key index I've been watching. I trade tech stocks mainly, so I like keeping an eye on the NASDAQ for the most part. Let's see if I can get this ticker here. So this is the NASDAQ Composite Index, and I just want to show, similar to the S&P, you know, this action at 5,000 on the NASDAQ. So a little bit ago, I put a trend line at 5,000 because it had been resistance. You see it acted as resistance in March and then again in April. And then it finally looked like May was starting to advance above it, and then we back tested it in June, held it and bounced, and looked like we had turned 5,000 into some support on the NASDAQ, but that got taken out today. Nice hard flush below 5,000, and it's going to be very important to regain 5,000 on the NASDAQ in order to set up a market bounce. Otherwise, I would look for lows towards 4,800, as that is in line with the March lows, just like 2040 on the S&P. I think that you're better off watching the NASDAQ for your leadership, as she was the stronger index between the NASDAQ and the S&P so far this year. The NASDAQ has been a much better performer. So when she bottoms out, or if she continues to sell, that's probably going to be dictating things everywhere else. All right, a couple individual stocks. Want to look at Tesla first, because Tesla held up pretty well today, all things considered. Stayed above 260, and I want to see if Tesla can continue to stay above 260. I think if you do stay above 260, Tesla is a buy on dips, and she looks very strong. Looks like 275 to 300 is in play. If you lose 260, then I think you could see a pullback towards 250, and 250 is a key psychological level now moving forward. You've got this low just underneath 250 from the middle part of June. I just underlined it. It is June 15th, 2015. The low is $246. If you lose that low, then I think you can see Tesla come down to this area here, what I've marked number 1. This support is last year's close, right around 220. If you lose 246, I think you could see Tesla come down towards 220. But if you're holding 250, high 240s, I like Tesla for an uptrend overall. You can see it's been in a nice clear uptrend off of its March lows, April lows. So I'm net bullish on Tesla. I think it held up well today, and that's a good sign. But if you lose 260, you could see a little pullback towards 250. But I wouldn't be scared of that pullback. I wouldn't be scared of that pullback. I would be more of a buyer, at least on paper. On paper, not meaning not with real money, but on paper meaning that, you know, I write down that I like Tesla versus 250 if it pulls back. But if you open up and, you know, you flush 20 points and you're just getting killed like Priceline did the last couple of days, then, you know, my opinion might change. Speaking of Priceline, let's check this one out, as this stock has gotten slammed, or got slammed today to start the week, had the biggest percentage drop in my entire list, which is saying something, and it is below its March lows. It's red on the year. Break-even price was 1140. It is back below its downtrend line off of the all-time highs. I know I've got a couple downtrend lines here. This downtrend line here is the downtrend off the all-time high, and started to lose that late last week and flushed out further today. I'm going to shift to a weekly chart, as Priceline is down 4 weeks in a row, and this would be the stock's first 4-week losing streak in a long time. You got to go back to 2010 to find a 4-week losing streak. Implications of that, you know, tough to say, but just making note of that does speak to the fact that stock has had an easier time going down recently. And what I like about this breakdown is you had a potential inverse head and shoulders pattern on Priceline, but you just broke below the right shoulder, so that kind of negates what could have been a longer term breakout pattern forming, and it just looks weak, and I think it's a good stock to now short on bounces moving forward. It is a little oversold here. You can see in the right hand corner of my screen, 60-minute chart just pretty much straight down off of 1150, so a nice quick 5% drop. So a little oversold in the short term, but if it does bounce, I'm a seller of Priceline versus 1140 to 1150. I think Priceline's going back to $1,000 this year. That is the low for the year. It's going back to $1,000 versus 1150 to 1140. 1150 being psychological resistance, 1140 being last year's close. Priceline is in the red currently and on track to have its first losing year in years and years. So Priceline, weak stock, like it as a short on bounces. You know, a couple stocks you look at after a day like today and you say, oh, they're looking good for a bounce play, but Priceline does not fit that criteria. While again, I think it's oversold in the short term and it might bounce, it's a name that I am short biased moving forward. Another stock with a similar setup to Priceline, haven't really gone anywhere all year, and that's Google. Google has been in a pretty clear channel between 530-ish on the low and 560-ish on the high, with a couple brief moves above 560. But that's been the channel. You just respected channel resistance last week on Google, and now you're back down approaching channel support. But I think Google kind of had a fake out to the upside last week. It got above 560, but this is a pretty solid lower high compared to the highs from April. And Google to me is another one that I think if you base below 550, she is a short on bounces moving forward. One of the things I'll be watching for on Google too, you know, Priceline, we saw Friday, you got commitment beneath 1140, and that followed over with awesome downside today. Well, Google closed last year at 530. She is more or less in the black on the year. She's up 2%. Google, if you start losing 530, I think it is a pretty easy shot down to 500, which is the 52-week lows from January. So Google, another one, short term, maybe a little bit oversold, might set up for a bounce, but I am short biased on a bounce for Google versus 550 now, looking for a breakdown below 530 at some point this summer. As far as setting up a bottom on Google and, you know, really breaking out, I don't trust anything Google does to the upside until it can get back above $560. So while I'd maybe play it for a bounce right here versus channel support, it would be for a short-term bounce, wouldn't be for a, you know, a snapback rally. This is a stock that I think is vulnerable. I think it's been in trouble all year and it's avoided breaking down, but now that the market weakened today, I think you see Google as a weak stock moving forward. Looking at Apple, so Apple's another one, a lot of channel characteristics over the last few months. It's been in this channel since late February, 132 on the high, could even just say 130 on the high, and about 125 on the low. You've had brief moves above 130, brief moves below 125. Here you are again today with one of those moves below 125. You are approaching key trend support. This is off of the October low, I believe, for Apple. If I go back, yeah, so this trend line here started at the October low, and you can see it is getting close to being touched. It is at 122.80 ish, 123 just about. Might touch that tomorrow, just about 1.5% away. And next week, as we move into next week, I should say this trend line will be moving up to about 124 on Apple. I think Apple, like everything else, it's weakened and looks weaker than it did a few weeks ago, but more than or less than a Google or a Priceline, I'm not bearish on Apple. I don't think it's setting up for a big time breakdown. I think it's Apple, and people buy Apple when it goes down. So once you get close to this trend line, which you're already approaching, I'm going to look at a long trade on Apple. I've already placed an order to sell a September put that is out of the money, because I just think if Apple can make a nice flush, I think this is a good opportunity to go long. I don't know that I would be picking up calls hand over fist, but again, I will sell some puts if I can get, more of a flush down here. I'll sell some puts and see if the stock continues to come down. You could look out a couple months on Apple, and the key is that you feel the same way about it as I do. But for instance, you could look at the September expiration, which is what I've been doing on Apple, or what I'm looking at, I should say, and I'll show you guys that you've got some premium starting to come into some strikes after today. So what I just pulled up is the Apple September expiration 105 strike puts. They rallied 50% today, and I wouldn't be surprised if these are going for $1 tomorrow. They closed 75 by 78 cents. If you're selling one of these tomorrow, or if you're selling one of these for $1, you get to collect $100, and you are essentially going long Apple stock at $104 per share on September 18th expiration, if it's there, if this is in the money. For me, I'd be fine with that. You would have to buy 100 shares of Apple if it was in the money. But if Apple wants to go to 104 between now and September, I think it's a buying opportunity. That would be a 20% drop, over 25% drop off of the most recent all-time high. And I think that the market, if that happens, the market has seen a very, very big move to the downside. Frankly, I don't think it's going to happen. So I just think, it's a good income strategy to sell out of the money, deep out of the money on Apple if it makes a big drop, because I would anticipate it just kind of being able to keep the $100 premium. If you wanted to be more aggressive, you could look at the 110s, which are already over $1. But bottom line is, if Apple washes out, I'm going to be looking to sell some deep out of the money puts, because I think it's a good setup on Mr. Apple. What would have me very concerned on Apple in the short term, though, is if you are not regaining this 125 area. If you're not regaining 125, then I am looking for a test on this trend line, and then ultimately looking for a test on 120. That is versus 125. If you're regaining 125, I'm looking for a test back up towards the 127 to 128 range that it just got rejected in. And if you don't want to go naked on Apple, you don't want to sell puts outright, you could look at something like a vertical put spread, sell a vertical put spread, or sell a ratio spread. Different types of strategies you could implement if, like me, you believe Apple would be a buying opportunity on a big drop. All right, one stock that I don't think is a buying opportunity even after another big drop today is Twitter. Twitter continues to get slammed. Stock closed at a new 52-week low today. I know it didn't make a new 52-week low today, but it closed at a new 52-week closing low. This is the lowest it's closed in a year. Today at 34 bucks 21 cents, and Twitter just looks awful. Tried to bottom out a little bit, put a base above 35 bucks, couldn't do it, came right back down. Now it's beneath 35, and these highs, in the low 35s, if you're staying beneath them, around here, then Twitter to me is going towards 30 bucks, and we'll see what happens there. But I think Twitter, like Priceline, is a short on bounces until further notice. She's got a lot of work to do. It's going to need its earnings report to be lights out in order to give this thing a catalyst back to the upside. But Twitter to me looks pretty awful. All right, those are the plays I wanted to go over myself. At this time, I'll review a couple charts. Had one request for JUNO biotech stock, which I know made a big move up after hours and then has pulled back a little bit. So you went from, here's the after hours action right now. You can see this big spike went from 40 bucks up to 80 bucks. 100% spike, well not 40, but 45-ish up to 80. Now you've pulled back, trying to hold 65. I'd want to see JUNO hold 65 in order to curl back up here towards the $75 to $80 range. You look at the daily chart, and 65, not only is it coming in play from the after hours, but you can see that this was the previous highs here before this move started to the upside. It looks like the stock just IPO'd last year. All right, so watch $65. It's going to be up there. If you are losing 65, I think you could see some nice gap filling, assuming that there is a gap tomorrow, as it is up 40% after hours. All right, so over under 65 set up on JUNO. That's going to be very key to me. Any other names? All right, guys, so good luck if you took anything overnight. Otherwise, you're probably like me, just kind of waiting to see where we're at tomorrow. Are we gapping up? Are we gapping down? And we'll see. Just keep in mind, with the market having this big decline today, premiums are going to be a lot more expensive. All right, premium is going to be a lot more expensive than it's been recently. So for those of you that usually buy out of the money, just make sure that you understand, if you're still going to be buying out of the money, you're paying a lot more for those out of the money options than you were paying just a week ago. And that's because implied volatility got ramped up today with this big move. And personally, I don't usually, when implied volatility gets ramped up, it's not a great environment to own premium in. It doesn't always work like that. Sometimes they still pay, but just keep that in mind. You don't want to get caught buying super inflated premium. That's why, for me, I'm looking to sell some of that premium on a stock like Apple. If it does wash out big and implied volatility ramps up, puts get expensive, I'll look to try and collect that. All right, guys, good luck. See you tomorrow morning. Thanks.